Good evening everyone. Welcome to Nifty 50 Analysis. On 19th May 2022, we have seen that due to inflationary pressures and unfavorable conditions, the global equity markets have taken a hit. Let's look at the daily chart of the Nifty 50. Here we can see that after reaching its all-time high of 18,604 on 19th October 2021, the Indian markets have seen quite a bumpy ride in the past few months. Technically, it can be observed that Nifty has been trading in a descending, broadening wedge formation. Bearish sentiments have prevailed in the Indian markets for the past 6 months. It can be observed that the index has formed a triple top where supply zone can be found above the level of 18,056. This is the same level above which the market has corrected thrice, and we have seen the markets to come all the way down to the lower levels of 15,952 to 15,684. Recently, in March, when we saw that the Ukraine-Russia war was at its peak, the index had reached the low of 15,671, from where it once again pulled back and reached the higher levels. By looking at this chart, one can argue that we might have formed a current swing low in this zone, but the things get trickier when we take a closer look. From a larger perspective, the market is trading in the C wave of the corrective ABC wave. Corrective A was followed by a quick pullback in the form of wave B. This is where the HDFC merger was announced and the market once again crossed the 18,000 mark. It can notably be seen that the markets are failing to sustain at these higher levels. While everyone was expecting the index to hit a new all-time high, the markets have corrected even sharply, and currently we stand at 15,800. Where could the wave C end? We'll discuss it in the upcoming slides, but if we take an even closer look at the impulse wave inside the wave C, we can see that the wave 4 has been completed at around 16,386. This wave 4 was a pullback, and in the upcoming week an even stronger wave 5 is expected. The RSI has given a bearish crossover or a breakdown at the current value. The index still has a space of at least 200 to 300 points open on the lower side before we can say that the market is oversold. To conclude, we'd like to say that we are clearly heading towards 2 to 3 months of weaker markets with higher volatility. It is clearly a sell on rise market. Of course, like everyone else, we hope that the market has bottomed out at 15,671, but unfortunately, inherent weakness is clearly seen across global markets and will continue to be seen until the Russia-Ukraine crisis is resolved and the global economy manages to turn out the inflationary tide and the damages which are caused by the pandemic and the waging war are resolved. Best case scenario, initial support level is seen at 15,503, below which there are high chances that we can even break the 15,000 mark towards 14,957. In worst case scenario, it is expected that 14,526 could be quite possibly seen by September. Thank you so much for your time. Disclaimer: this presentation is prepared by a student of the financial markets and is made purely for educational purposes. Please contact your financial advisor or broker before taking up any trade. Thank you so much.